the audit report. So I don't know what I will be doing here, but I will turn the time over to you. Is that
sure. Ingrid, do you guys have any questions first that you want me to answer? Do you want me to go over?
There's the one I sent you.
Yeah, I know there was a question that came in from the general public on how you guys compare as an entity to other municipalities or other similar type entities. The issue with that is there's so many moving parts. You're really comparing apples to apples because you really can't compare yourself to a municipality. So you really can't compare yourself to like Stansbury City or Tooele City or any of the other cities out in this area, because with municipalities, they have so many different revenue streams, different types of expenditures. You're very limited on what you're providing services for. Any of the other interlocal agreements, you can't really compare yourself because the whole nature of an interlocal agreement is it's a group of people that form this entity to provide a service. But all of the interlocals are they're so unique to themselves that you really can't compare because they're not providing the same service that you are. So it's really hard to compare yourself to anybody else. I guess one recommendation would be to, you could look at the increment that the agency is getting from the county compared to some of the other cities around. And then how you're utilizing those funds. But that would really be the only comparison, because the only thing you have similar to any of those cities is property tax. That's really the only thing that you have to compare to. And based on the amount of services, my guess is your income is probably significantly smaller than a lot of the cities around. You can compare yourself to local districts. I haven't looked at any of the local districts around your area. We do quite a bit of work for districts that are very comparable to you guys. It's really hard to compare apples to apples. Really what you guys as an entity needs to decide is, what do we need to spend money on? What do the citizens expect us to spend money on? And how are we going to fund those services? So this is actually the financial report from 2022. I don't know that I need to go through the audit reports and all the other reports. I do know the one finding that you had last year was a budget finding. So that would have been a couple of years in a row now that you've had a budget finding.
What does that mean?
Yeah.
So that just means that you exceeded your budget. So your expenditures exceeded your budget appropriations.
So does that mean, can we ask questions as we go on?
Sure, I'm here to answer
Okay,
questions.
so when you say we exceeded our budget for that year, does that mean that we have $0, or does it just mean that, because it's my understanding we have to maintain a certain amount. We can never go to zero.
Right.
We're not supposed to.
Correct.
And we're supposed to, and so when you say that we exceeded our budget amount, does it just mean that the budget that we proposed or
Correct.
put up, we went over that budget, but that doesn't necessarily mean that we're out of money. We still have other funds.
Yes, because you cannot budget below 5% of your general fund balance. You have to maintain
At
at
what
least
time?
at any point in time.
I see.
So at any point in time, you really should not budget more than what your revenues are coming in, and up to, well, down to 5% of your general fund budget.
So,
not including that?
Yeah, just general fund. We're not talking, and I'll go through that a little bit.
and so just so I can understand this, I think there are things that come up throughout the year, like for example, this year we replaced that boiler at the swimming pool, so we're like, okay, we're gonna make, and like we can't find all that money in the budget, we're gonna spend a little more. And what we need to do is make an adjustment to our budget, right? And that's just what didn't happen, just taking that extra formal step. Like, we were aware that we were making some additional expenditures, but we needed to go back and take that formal step of.
Yes. Yep, have a public hearing. Black and white says that if you are running close, I mean, you as a board should be getting financial reports at least on a quarterly basis, I think is what's required, but really on a monthly basis, you should have a report that shows year-to-date expenses and what the year-to-date budget is. So that you can see, okay, in this category, we're getting close to our budget. Black and white says you cannot go $1 over your budget unless you have a public hearing to raise that budget. Now, as a board, you can move from one line item to another line item. So if you have excess budget in one category, you can put that into that. So then you don't increase your overall budget. But if you are going to have to increase your budget, you have to go to the public hearing. Right. Common practice is most people typically go over budget, and then at the end of the year, they have a public hearing and fix it. I don't like that practice. It's not really a good habit to get into. A lot of people put a lot of emphasis on the budget, but your budget is just a roadmap. So it's a roadmap of what you're gonna do in the next year or the next 2 years in order to function as an entity, and how much things are gonna, the services that you provide, how much is that gonna cost? And then do you have the revenue streams to match those services? So I care more as an auditor, I care what actually happened, because that's what we're testing on, is what is actually happening. But we look at the compliance, your compliance with, okay, did you stay within budget, or did you exceed budget?
You ever had the experience, or do you ever run into the experience where people that were in these budget X, and they actually come in under the budget, therefore they have money supposed to be left over?
Supposedly,
I mean, or is everybody just try to fuss
No.
around and get zero?
yeah. So budgeting is this whole new, it's its own kind of animal, and it's in it. So I have some clients that try to budget to the very dollar. Well, never fails, they're gonna have a budget finding every year, because there's things at the end of the year, invoices that come in January, February, that you have to accrue back into the previous year. And all of a sudden you're over budget because you didn't foresee those coming. So you have to give yourself a little bit of wiggle room, because there are things that are gonna happen at the end of the year that are gonna cause you to go over budget. Ideally, what you would like to do in your budget is to budget to where you have excess every year, to where that's now gonna roll into your fund balance or your equity in private terms.
Right.
That gives you the ability to use that money in the upcoming year, because your budgets lapse every year. So you have to set a budget every year. So then how you balance the budget is, if you're gonna budget for a surplus, then that is a revenue line item that's gonna go in the surplus. So you actually budget for that surplus. Vice versa, if you don't have enough money and you have to have expenditures, then you have to have a line item that's budgeting for prior use of fund balance. So you're reaching into your equity and pulling out prior year surplus to use this year. So that's how you balance your budget to zero. All right, so let me give you just a couple, hopefully this will help you make sense on the financial statements. So this is, there's different, oh yeah, sorry. Is that still readable? Is it getting small?
Can you make it, there you go, that's better.
Okay.
What's supposed to be in the back?
So I'm gonna go through like the different statements that are in the basic financial statements. And for some reason this year, this is becoming quite an issue. It's not a bad problem, because a lot of the general public are very concerned with how the governments are spending money. So they're getting a hold of the financial statements, but they're trying to read it like you would a private business financial statement. And government reports on a separate accounting standards than private businesses. So they have their own government accounting standards board that sets the policies on how certain transactions are treated versus private type or public type businesses. The statements themselves are different. So This statement here is your balance sheet, which would be comparable to a private company financial statement. So this is on the full accrual method. If you know accounting language, this is full accrual. So another term is this is using the economical resources method of accounting, meaning that it has all of your capital assets as well as any long-term debt. Luckily, the service agency doesn't have any long-term debt. But this statement is primarily used by external people to really determine the health of your agency. If you were to go issue debt, then they're gonna rate your bonds based on ratios they get off of this statement. So the economical resources means that you have these assets here that have economic viabilities that give your agency value, if that makes sense. So because you have capital assets, therefore you have value, right? But if we hop down to this statement, so this is the second balance sheet that you're gonna see in government financial statements, and these are your funds. So this is primarily how you operate as an entity. So you have the general fund, you have the capital projects fund, you have your impact fee, and then a total call. This one is presented on the current resources method. So this means it's more of a cash flow type. As money comes in, it's revenue. As money goes out, it's an expenditure. So this is how you prepare your budgets. And really, these are the statements that you need to pay attention to as far as, okay, how much cash do we actually have as an agency? What ability do we have to spend money going into the future as an agency? So if we come down here to the income statement, and then I'll just point this out real quick. So always the statement after the fund statement. So this is the reconciliation between the fund balances in the fund statements and then your net assets. So you can see there is a significant difference between $3 million and $30 million. So what the general public is saying is they're coming in, and a lot of people are going through truth and taxation right now because there's a significant push to raise property taxes. It doesn't matter where it's at. I just got back from Uinta County, and there was a meeting of 1,500 citizens came to this meeting, and I started talking about this very same thing, and everybody basically yelled me out of the field because they didn't want to hear about it. All they wanted to do was complain to the commissioners that they were raising property taxes. So this is not, you guys are not in the boat alone. There's a lot of people in this boat. What the general public is getting, they're getting the government-wide financial statements, and they're saying, well, wait a minute, you guys have $30 million in assets. Why do you need to raise property taxes? And I'm not here to tell you whether or not to raise taxes or not to raise taxes. That's not my place, but I can give you some good guidance on then you guys can make that decision yourself. So we hop down to the balance sheet or the income statement of your fund statements. So this is gonna primarily follow your budget. So in the general revenue, you have, or the general fund, you have property taxes, charter services. Last year in 2022, you had a legal settlement that was due to the fraud that happened 5 years ago. So you finally recouped some of that money. And then you have basically some miscellaneous income and then interest income. And then all of your expenditures. Now keep in mind that these groupings are based on the old groupings of the financial statements. There are new groupings that are, I think, more relevant to what an actual government should be. So don't get too hung up on what this is saying. I mean, I was gonna try and do this, but I couldn't get my system to pull in last year's numbers into the new grouping schedule. We do have the new grouping schedule, so we can put that together for you. So that's something that you want.
So the expenditures that are listed here, you know, we have different, we call them different groupings. You know, I would call that different cost codes to put items in. You can have, I don't know what you got there, 8 items, or you can have 28 items.
Yep.
Is that true?
Yeah.
Okay,
So really, this is based on function. So I think now the groupings are general government, parks and recreation, more of what a traditional government shows as groupings.
So, you know, as items or when you have these kind of groupings right here that are based kind of on function or whatever, I don't know that you necessarily see. I mean, you see the true expenditure because they're listed there, but they're not really detailed enough for
Correct.
to make good decisions.
Well, and that's where Ingrid can give you reports out of Dolores that have all of those and all the details, so you can see exactly where the groupings and all the accounts that make up that grouping, what the numbers are in each of those. It's just that when you roll it up into the financial statements, it's too cumbersome to put all of your expense accounts in that. That's why, and this is another difference between public and private, or government and private financial statements, is typically they're gonna go off of natural classification, so you're gonna have salaries and wages, employee benefits, supplies. Those are the normal classifications that you typically see in private company financial statements, but government, they don't like to see the natural classification. They wanna see what the function is that those costs are going to. So whether it's parks and recreation, highways, you know, what does it cost to maintain your highways? Well, there's gonna be salaries and wages, there's gonna be supplies in there, but it's more the function than the natural classification.
So by the time Ingrid gets, I mean, she has a number of line items that are going to total up to highways or whatever it is as she is, you know, and everybody has a supervisor or whatever, you know, has got a couple dollars to it. General manager goes or whatever, say, okay, well, this is a highway deal, this is a recreation deal, whatever. And I guess my thought, my question is, you know, you have a multitude of line items that are then going to go into a subcategory. Does that make sense? And then the subcategories could go into, let's say, a larger category of highways. Isn't it reasonable to have the subcategories listed below the big one? You understand what I'm trying to say?
Yes. Yeah, typically when your annual financial statements come out, they only want to see the primary functions. So it's not really appropriate to see all the subcategories underneath those functions. They only want it by function, and that's just a GASB rule.
So for example.
But you can see those internally, absolutely. Ingrid can print that out for you anytime.
So for example, golf course maintenance would be a subcategory. Underneath that, those subcategories would include wages, salaries, water, whatever else goes into that roll-up. You don't need to see those at the macro level. You just need to see what that golf course is costing. So they roll all those up into the subcategory. Problem with these were done probably 20 years ago, and they don't match how we're functioning. That's
You're saying the categories.
the categories.
Yeah, let me show you. I just regrouped it so we're ready for this year's audit. So I can show you what last year's groupings are gonna be. Maybe on internet. Help me out.
So these groupings, they're not new. The ones that you're talking about,
They are new.
well, they are new.
Yeah.
Okay.
Yeah, for me.
We've been
guys have had it
operating
for a
on it
year.
for a couple of
Right.
years. You just haven't
Right.
rolled it
But-
yet.
Okay, that's the point I wanted to get to.
Yeah, so when Dave was helping you out, Dave actually came in and redid all the groupings into more government appropriate type groupings.
Mhm.
But then when he was no longer here, Veronica kind of undid a lot of what he did.
Okay.
And then Veronica left. And so when we got here, we have all the accounts. We just didn't know all of a sudden that they were regrouped into other
Got
categories.
it. Okay, thank you.
So this is gonna be, if we get down here,
And I'll let you enlarge that when you get to where you.
yeah, I can,
Either that or I'll use the,
nope, you're good. So you're gonna focus on this column right here, which is your general fund. This is a report out of my software, so it's gonna look a little bit different. But each of these are your account numbers.
Okay.
And then here's the description of what is in Flores. So if you've got these reports on Flores, you're gonna see these account numbers and these. And then this would actually be the balances that we're talking about, since we don't have anything for 2023 yet. This is all 2022 numbers. So you can see on our administrative, there's salaries, wages, benefits. So basically you have all of your national classifications under a certain function. And then, so you got administrative council, parks, rec, golf course. So all of that detail you can get at any time, and you should be getting at least quarterly, but I would recommend monthly from the finance management team. So you can see where you're at any point in time in the year.
So you're developing a budget and or, you know, finance committee says, okay, well, this is how we see the budget right now. But we've taken input from various supervisors who are telling us, I got this problem. we're trying to fix it. And if I had a question about swimming pool, golf course, whatever, then I could ask for, okay, what's the break? The golf course, we got a budget here, $90,000. Is what's making this up? Is there, you know, we spend a whole load on grass seed, it's not working or what? But that,
Right.
okay.
All that details in Flores. So all Flores is built on all those transactions that build that system, right? That's your financial reports and all these balances have all the detail that ultimately end up at these balances.
Right. Okay.
In Florida, you can go on and click on office supplies. It'll give you a complete list of what office supplies.
Okay.
One of the things we did with John when we went to those groupings is we wanted to tie the budget to the Flores accounting side. Before they were disconnected.
Yeah.
They were trying to marry it back together. So it makes more sense when you're going from the budget to the accounts and then back and forth.
So we've got that.
Yeah, while we're working on it. Yeah, that's how we did this budget this year. We went back and did zero base and had them individual and provide information.
So everybody started out with zero.
Okay, let's keep going.
Oh, no, you're fine. So what we talked about earlier was, so here's all your revenue. This is a one-time revenue. You're not gonna get this revenue anymore. So as far as budgeting goes, one thing that you have to remember is the only thing that you're gonna get throughout the year is you're gonna have this charging for services and this interest income. This is such a small number, who knows? I mean, that might come in January and it might not ever come in. It just depends on what makes up the miscellaneous revenue. But your biggest revenue driver, property taxes, I mean, that's gonna be your main source of revenue. And that doesn't come in until the end of the year. So you've gotta be able to pay for expenses for a whole year. So,
I just want to get this on the record. We're not gonna see that income from property taxes until December of 2024.
yes, so you're gonna get property taxes right now. You'll probably get your big chunk in December. But that's pretty much your spending money for the next year until you get that big
Okay,
money.
thank you.
So if there's a decrease in tax or an increase in tax, you really don't see that at least until the next tax assessment. Let's see, what was I gonna say? So this is, when you're looking at financial statements, and this is for everybody, this is gonna be your primary operating fund for the government, for your entity. The capital projects fund, the only reason you set that fund up is if you are going to save money for a future project. Then you can set aside money for future projects. In this capital projects, that alleviates having too much fund balance in the general fund because you're trying to save up for a project in the future. That makes sense, but yeah.
So under, in this particular category here, this example here, under capital outlay, they've got a category for category for clubhouse. And under park, we got $545,000. If you were to go to that, under force, then it's going to show below that, I assume, that it would say, okay, we put $200,000 aside for.
Well, this number right here, if you were to go look at the detail of this number right here, that's gonna be, this is expenditure driven, so this is an expense right here. So in 2022, you spent $545,000 on improvements. You know, golf,
But again,
anything that's capital related.
but again, it was say.
Yep. Yep, exactly.
So what John's trying to say is you need to have money in that capital projects column. Cover that.
Right.
And oh, by the way, when the boiler broke down, if we had an operation for maintenance, then that would come external to the operating budget, that would be on the budget, say, over the years. So then you can identify what your actual operating costs are versus the one-time or water expenditures versus the emergency.
Yep, and then this fund right here, the impact fee fund, so this are fees that you're collecting based on certain projects or development or what have you. And this is, you know, all the impact fee rates are, you've had a rate study done. This is how you collect impact fees. These fees are very restrictive on what you can do for them. You have to use them for development and you have to have a plan for them when you collect them. So the state requires that you have, not only you have to track who paid the money in, but you also have to have an outline plan for how those fees will be spent within 6 years. If you don't spend those fees within 6 years, then you either have to reassess and reassign those fees or you have to pay those fees back. That's why you have to track who you got it from and when that money gets spent, and it's kind of cumbersome. But just so you know, like this is money that's not readily available. Just to, in case you're short of money, you can't just dip into this fund and use it for anything. It's very restrictive on how you use it. So that's why I say this fund right here is where you need to look, because this is basically your operating fund. This one is really set aside for future projects. Let me go back. So this is the fund balance sheet now. So in your general fund at the end of 2022, you had $2 million in fund balance. And this balance right here cannot go less than 5% of your annual revenue. And the maximum is 100% of your revenue plus your upcoming property taxes. And the reason why is because it used to be only 100% of your revenue. But the problem is you spend the money and then all of a sudden you get a whole dump of revenue right at the very end of the year that's really for the property taxes that you're going to use for the next operating year until you get to the next property taxes. So everybody was having fund balance problems because they try to maintain a healthy fund balance, and then all of a sudden you get dumped with a whole bunch of revenue with no expenses to offset it, and you're over fund balance every year. So the legislature, I think 3 years ago, changed the code to where now it's your operating revenue plus whatever next year's property taxes are. You can maintain in fund balance, and that just allows you to have the operating funds for the upcoming year. This fund, so you can see unassigned means that this can be used for general operations. It's unassigned, it's not earmarked. This can go towards anything. In your capital projects fund, it's always assigned. That means that you've assigned that to capital projects in the future. So you earmark those funds, and then impact fees, they're restricted. So if you build up a very healthy balance in capital projects and say your general fund, you know, you actually need some money, it's okay to transfer a little bit back into the general fund for current year operations. However, it's not unassigned. I mean, really, it should be used for capital projects. Once it's moved in there, it should be used for capital projects. But it's not a forbidden thing that you can't transfer it back out if you have a bad year and you need some of those funds. The concern that I would have as an auditor, or, you know, looking at your financial statements for last year, is you started out with, so this would be your equity in your funds in private terms, or your fund balance. In government, they call them fund balances. You actually increased in your general fund, but that was because of the money from the fraud. So basically it was the insurance money. Without that insurance money, you basically would have broke even, probably lost a little money in the general fund. In your capital projects fund, I'm not really sure why, I can't remember why you transferred money back into the impact fees, other than you spent money that really should have been out of impact fees, that probably should have just been done out of capital. But your projects fund balance went from 1.5 million down to 200,000. So at the end of 2022, you only had $200,000 for capital improvements in the upcoming year.
Could you make the assumption, some reasonable idea that this is true, but does that mean that the money was incorrectly categorized at some point? I mean, that's a hell of a jump.
Possibly. I'm not really, I don't remember the details as to why that transfer happened. But my guess is it probably was at one point in time categorized incorrectly. And I think this transfer actually happened, if I remember right, significantly early in the year. This wasn't like a year-end thing. But the other thing, it might have been actually to balance, because your impact fees have its own separate checking account and needs to be maintained separate because it's restricted. So any interest earnings that you make on that money, they also become restricted. So it may have been to balance the balance that's in that checking account. If that makes sense.
No, say that again.
So the only thing that you have in here is you have this restricted cash. And then this is kind of like, the reason why you have this negative number here is all of these three are combined. So there's a combined, you have one checking account that allocates across three funds. And then this is its own bank account. So to balance that bank account, then that transfer had to happen.
So, I'm sorry, you just said that all three of those funds are coming out of one checking account, but we have a separate.
Yeah, yes, in the impact fees, but there's transactions that are happening. So what they do in government is you don't want to have so many checking accounts in every fund, and every fund doesn't need its own checking account, because you're going to pay for something and then you're going to code it to capital projects, or you're going to code it to this or whatever, and it kind of, so the one main operating account shares among all the funds, and then your impact fees, because they're all restricted, it has to have its own bank account. So yes, it does have its own bank account. But there's transactions. Basically what this is saying is it's inadvertently borrowed money from one of these other funds.
Right.
How do you do that? That seems kind of odd.
Well, and it's kind of hard to explain, but in a nutshell, what happens is if you spend the money out of your operating checking account, but then you code that to impact fees,
Oh, yeah.
then it's actually taking it out of that shared account, not the impact fee. So it didn't get spent out of the impact fees account. So inadvertently, it's borrowing money from one of the other funds. And that's very common. You can have formal loans where you actually borrow money from the capital projects to the general fund, or the general fund will loan money to the impact fee fund, whatever. And it can be formal and should be formal. But a lot of times what happens in the governments is because of the way they've allocated their expenses and their shared checking account, their funds will go negative. And so inadvertently, it's borrowing money from those funds, even though there's nothing formal set up. And it's gonna fix itself as the transactions kind of keep going forward. It's just, you're looking at a snapshot in time. Any questions?
Keep rolling.
Okay. So you can kind of think about this. One of the most important statements in financial statements that nobody ever likes to talk about is the cash flow statement. So if you guys are familiar with private financial statements, you have your balance sheet, which is a snapshot in time. You have your income statement, which shows the operations of the entity during 2 dates, typically from the beginning of the year to the end of the year. And then you have the cash flow statement. And everybody always pays attention to the balance sheet and the income statement. They don't care about the cash flow statement, but the cash flow statement actually tells you the health of your entity. If you have positive cash flow from operations, it means that you're paying for yourself. Basically, the money that you're generating is paying for all of your operating costs. And then you have financing section, you have investing section, and based on how those numbers shake out. So when I'm looking at the health of a financial institution or an entity, I'm looking at the cash flow statement, because that tells me, I can tell how long they've been in existence. If they're a brand new company, they're typically using a lot of debt to finance things. But if they're paying for their own operations, it's a sign of health. So you have to think about this as it's kind of a combination between your income statement and your cash flow statement. Because the way governments work, you don't have your own separate cash flow statement. You do in proprietary funds, but you guys don't have any of that, so I'm not gonna muddy the water with that. But in governmental financial statements, this basically is the cash flow statement. As money comes in, it's revenue. As money goes out, it's an expense. So if you make a debt payment, or if you pay for capital assets, those are expenditures. And the difference between that and the first statement that we looked at is we would pull that out of the expenses and either put that up with capital assets or put them up as part of debt. So when you're looking at, okay, how are we doing operations wise? Well, excluding that $1 million insurance money, the general fund basically lost money. The capital projects fund significantly lost money. And then the impact fees, they're gonna be the impact fees, and you should have a schedule on how that's gonna be spent. So everything that's fund balance, so that 992,000, there should be a schedule somewhere on how that's gonna be spent over the next 6 years. Okay, do we have any questions? I'm happy to answer questions. I know it's confusing.
Yeah, no, just keep going. That's good. In the general public, ask you a question?
That's not the yes, it's the board.
Yeah, we had set up to have you write a question so we can ask. Go ahead.
So my general question is, your impact fee. Can you quickly go through, you said that is very specific. What can the agency spend it on? So can you give us like a little example?
Sure, so a lot of times impact fees, they're attached to current developments. So if you build a house or if you build a building, you're gonna pay impact fees. You're gonna pay impact fees for typically water or sewer Parks and recreation gonna become a big thing. So when the entity collects that, then they have to say, okay, this person paid us this amount of fees, we're gonna put that towards this project. So the project could be a new park, it could be new water or sewer lines, it could be new roads. It's really to help provide those services to the new developments and to keep up to date on the infrastructure of whatever you're operating.
Or expanding.
Or expanding, yeah, new or keeping up to date.
I like to think about it like, so when you have, say 5,000 residents and you have like 5 parks, by the time you have 10,000 residents, you should have 10 parks so that the level of service stays the same.
So look, we have several parts that are not done, that's quite a bit of money right there. How come we're not spending that?
We
We
are
only
trying,
got 6 years.
Yeah.
we are trying to spend that, that's why you've seen that activity recently, which I've got out here. The previous boards have not elected to not spend that and sort of hold it. And I know when I first started coming and sitting out there, they were concerned because they were bumping up against that 6-year. So they were either gonna have to do something or put the money in. We want to get ahead of that power curve, so we're providing the services in an expeditious manner, but we are behind the power curve because that was not. Does that make sense?
So now we're away. Okay,
Yeah.
all right, move on forward.
And we also wanna like, see if we can get some grant money to kind of double down on these funds or really for some
Yeah.
projects forward.
And a lot of times if you go out and get grants, if you have the ability to match those grants, then it's easier to get the grants. They'll typically grant you more money or they'll give you the grant if you have the matching ability.
And we're doing that a lot, sound wall trails and matching grants,
Yeah.
shoreline stuff and matching. So there are matching grants that we're leveraging those impact fees that increase.
Yep. Yeah, so that's one that I tell the general public, really this one, the information is on the impact fee schedule, that's the best place to get that information. So I really don't advise people to look at what's happening because this is just kind of a snapshot of, okay, this is what we did during this year, not this is our 6-year game plan.
So one thing that we talked earlier brought out was when we get to that end line, that imbalance where you showed we were, if we hadn't had the confusion of whatever, we would have been down to a little over $1 million.
Yep.
But our operating capital at a minimum level was 2.4 million, taking out the $1 million asset there. So we were really $1.5 million below where we needed to be to operate in 2020.
Yeah, so.
Based on that balance.
Yep. And that's kind of depleting also your capital projects. So if you have any capital expenditures this year, it's gonna probably.
It came out of operations, which is why we've got finding operations because of the capital.
Yeah. I mean, and this is hard to say in a public meeting. Nobody likes to have taxes raised. And so this is probably gonna be an unpopular comment. Everybody wants the services, but nobody wants to pay the property taxes to provide, but that's what's paying for the services that you provide. I mean, that's your bread and butter is property taxes. That's the only place that you're getting funds right now. Are there things that you can do? Yes, you can go through your expenditures and try and, cut some services and see where you can script and save and try and fit within a budget to be fiscally responsible and not have the waste and abuse. But reality is, costs are going up. I mean, we all know the effect of inflation and it's been awful inflation for the last, well, I would probably say 3 years since 2020. I don't think that we've seen inflation like this since I was a little kid. And so, it's getting harder and harder to provide those services at the same amount, that same level of service for the same amount of cost. Unfortunately, what that means is taxes go up. And so I'm not advocating one way or the other. I would say do your due diligence and, be as frugal as you can to make it through this time period, but at the end of 2022, you really didn't have a lot of excess to be really frugal and to kind of live on savings for a few years. It's,
Yeah, we were sucking in our big.
Yeah.
And that's the reason we did zero-based budgeting, because I wanted to quantify exactly what we needed.
yeah, and you should always do a zero-based budget. I mean, you need to figure out, okay, this is what the services are gonna cost. Now, let's look at our revenue stream and see what revenue streams are coming in, and you're either gonna have an excess or you're gonna have a shortfall. Well, that's where you have two line items in your budget that says you're gonna contribute the surplus to you, because you're gonna save for the future periods, or you're gonna have to use fund balance, which means you're dipping into prior year savings.
Yeah, unfortunately, we don't have any. fund balance.
Yeah. And I'm not sure, I mean, this could be a completely different picture at the end of next month. I mean, you've had a whole year, and I haven't looked at any of the 23 and 23 numbers, so this is all just based off of information that's 11 months old.
Yeah, I noticed going through that thing you pulled up earlier, which was the new split out, there's a lot of it. Is that because
No, that's just the way my system works.
that's just telling us that maybe those weren't accounted for, so it's.
No, so anything in here, all of my system is based off of the accounting balance, like what side of the T account it falls down on. So anything that's in black falls down as a debit, and anything that's red or in parentheses falls down as a credit. So that's all it means to me. So typically, all of your revenue are gonna be red numbers because they're a credit balance. We're dorky accounts like that. That's just the way I read things.
It's sort of like reverse Polish.
I know, and I have a hard time, sometimes I have to use lingo because that's just what it's called in the accounting world, and people give me this deer in the headlight look of, I don't understand the words coming out of your mouth, dude. So, all right, so any other questions on the financial statements? Do I need to explain any more? I mean, that's kind of the gist of what I wanted to get at, just so everybody kind of understood what statements are showing what, and what statements are appropriate to look at for what.
So if we were to have. You go up this a little bit.
Yep.
Ooh, right there, that's good. So if we were to have. Funds that have been set aside for capital projects in the future. Right now. Where would that line item be?
So that's gonna be, as money flows in, it's gonna be a transfer. So you're gonna transfer money out of the general fund, because that's where the money's coming in, right? And then you're gonna hopefully have more revenue than you do expenses, and then you're gonna transfer money, and so it's gonna be a negative number here, and it's gonna be a positive number here, and over time, then this number right here is gonna go up, and that's really what the funds that you have available inside that capital projects fund.
All right, so that. Got that. How do you, as a entity, keep track of the money that goes in the fund balance, so that, let's say you're trying to put money aside for 3 different projects. Is there some way to, does it get identified in the accounting system that says, okay, we put 200,000 for this, this, and this?
Yeah, so
Because what I have suspected, that sometimes you put aside money for 3 different projects, and then all of a sudden it's like, well, you know what? Projects A and B aren't as important as C. So the hell with A and B, we're just gonna put it all in C, and we go from there. I assume that that's acceptable, but
yeah,
it's
absolutely.
irritating to.
Yeah, and so if you're talking about specific projects, you can do that inside the accounting system. It gets kind of monotonous because those are gonna be always changing. So how it works in your financial statement system is, this account is assigned a number, this account is assigned a number, and this account is assigned a number. So general fund is typically 10 or 11 in any government worldwide. Capital projects are typically in the 40s, so that'll be like your 40 fund or your 41, 42. Impact fees, it could be whatever you want. I mean, it's kind of a special revenue fund, so it's kind of wide open, but for you guys, it's 40, 44. So they're each, so you can assign fund balance and you can move money into the capital projects and you do a transaction that identifies, okay, 40 is where this is going. And then within that fund, this is where I'm gonna put it. So even though you have one cash account, that cash checking account is gonna accumulate, right? As you have funds built up in capital projects. But that's why you can't just look at that checking account balance and say, hey, we've got $5 million that we can operate on. You gotta go here and get your monthly reports to say, okay, what are the balances in every fund? But you should have something external that says, based on our now 199,000, these are the projects that we need to spend money on. These are the capital expenditures that we have. So a little history on the capital projects. I mean, black and white, like under the GASB rules, your capital projects should only exist when you are trying to save money for the future projects. And you really should have a capital projects for every project. But the problem is everybody was opening and closing capital projects funds, and it just got to where nobody can track it. Okay, 6 months out of the year, you open one, then you close one, and then at the end of the year, you have all these open and closed funds. And it was really hard to track it. And so, let's see, John Dougal's a state auditor now, so it was the two before John Dougal. He basically told the governments in Utah, look, this is stupid, just open a capital project fund and keep it open. So that's why everybody has a capital projects fund, and it'll always show up on there as long as there's money in there. If you drain it to zero, then it just goes away, and then when it gets money in it, it comes back. So it serves a certain purpose.
You recommended putting the operation and maintenance account in repair, whatever.
Yeah, so you can actually split in your system. I mean, it's all, to me, I don't necessarily care. But if we look at, you guys can put however much detail you want in the financial system. No, it's all right. So you can actually have multiple categories, whatever this is assigned for, and this is where you would track year to year to year. How much do we have left for operation replacement? How much do we have for building construction? I mean, you can name the categories whatever you want to name, whatever you want to name them. So that makes sense to you. You could have 100 if you wanted to.
It just rolls up to that.
And if you had 100, I probably would put all 100 on your financial statements because it would be nobody's gonna want to see all that detail. So we would just roll it up into a assigned fund balance, but it's there in your system to be able to utilize it.
And as Jim was saying, that might be the place that you would put funds for emergency
Yep.
services.
Yeah, because you're limited in the
Not
general
assigned
fund.
specifically, just said.
Yeah, because you're limited in the general fund to a maximum of 100% of your revenue or your property taxes. So it's not like you can really accumulate more than what your next year's budget's gonna be. But you can move money into the capital projects and save money in the capital projects for emergencies down the line.
Yeah.
Because there is no limit on how much you can have in a capital project. But it has to be assigned to something.
Any questions back here?
Just absorb it.
So I have a question.
So you guys are all gonna understand these financial statements. So you guys wanna be auditors?
It's just like budgeting.
Not
I don't have budgets at all.
Yeah. Exactly what I do.
Yeah.
So my question is, So you're, like the clubhouse, the swimming pool, we could pretty much pinpoint if it's making money every year or we have to put money into, right?
Yeah, but not from that statement. because that
No,
doesn't-
no, I understand, that's just.
Yeah, so let me show you this one. So this is, I usually don't show the statement because this one,
Is that what you're saying?
this one confuses everybody.
We have to think, hard as a community, what do you guys want? Do you want the amenities? We pay for it.
Yep.
If you don't want the amenities, we can't keep going on like this for another year, like everything is going up like he says.
Would you like to be our ambassador?
Well, it makes sense, you know, it's like being at home. I mean, I
So,
budget like at home all the time.
I'll give you two real world examples. One of them is probably gonna be a little bit of a touchy subject because it happened in Florida County. But, so Spanish Fork City is huge in recreation. I mean, they have just a monstrosity of recreation that happens in Spanish Fork. So, a few years back, it's been quite a while, 10 years ago probably, the citizens were very concerned because they were trying to raise property taxes. Well, they didn't want to raise property taxes, so they started transferring money out of their enterprise funds, which is typically power, water, and sewer. Typically, electric funds make a lot of money, and they have a significantly high fund balance, and so they were transferring money out of that fund back into the general fund. Well, people who are on fixed income that are older, or like me, I don't play sports anymore. I mean, I golf, but I don't play sports. So they look at it and they say, well, wait a minute. If you're able to pull all that money out of my power bill back into the general fund, why is my power bill so high? Like, I'm on a fixed income, I shouldn't have to pay that much for power if you're going to pay for recreation that I don't use. The problem with that, so then the state made a rule that said you cannot transfer money out of impact fees or, well, impact fees are restricted anyways. The enterprise funds like water, power, sewer, back into the general fund, because the general fund is funded by taxes. Sales tax, property tax, whatever kind of taxes, grants. So Spanish Fork City had to come, basically they put it out to the public and said, okay, what do you want? Do you want to raise property taxes and have recreation, or lessen the recreation? We'll leave it up to you guys to decide. What services do you guys want and what level of service do you want? Well, the majority of the public said they want the recreation, so they raised taxes. Another situation, and this is the Tooele County one, so I'll try to be careful, I'll try to be nice.
Oh, we don't.
One of the problems that happened out here with the Tooele County complex was they got grant money to build the Tooele County complex. Everybody was excited about having the complex be built. It was gonna bring all the communities, you're gonna be able to draw from Salt Lake, draw from Utah County. What they didn't figure on was the operating costs of the Tooele County complex. And so as the operating costs started coming in, they were transferring money out of other funds to feed this, and a lot of it was coming from the general fund. Uintah County is in the same boat right now. They built the Western Park complex, which is the same as the Tooele County complex. And now they're having to shovel in $2-3 million a year just to operate it. So everybody gets excited about it, but then they don't consider what are the costs that operate this thing. And then all of a sudden, I mean, that's where Tooele County, I mean, they were close to bankruptcy because they basically ran out of money because they were feeding it into the county complex. And right or wrong or indifferent, everybody wanted it, but then it's gotta be paid for somehow.
Then you get into a case where the pool has to be replaced, and then you get a huge.
Yeah.
That's probably not.
Yeah. So, I mean, so back to this statement. So this is a matching statement to the very first statement that I showed you. This is your full accrual economic resources statement that shows all of your capital assets, all of your long-term debt. So this is a full accrual statement, very much similar to a private. This is the income statement. And you're gonna tell me that's not an income statement. I know what an income statement looks like. It shows me revenue and it shows me expenses. Well, the reason why they set this up is Now, mind you, this is full accrual, so it's not, the numbers are not gonna exactly match what's in your fund statement, so anything that's capital has been pulled out and put up as assets, and this has depreciation expense in it. But it shows, okay, for each one of these areas, this was the cost of those areas last year. These three columns are external monies that you can get that helps offset that function. So you can go out and get grants, whether they're operating or capital grants, or you charge money for those services. Well, you can see in this last column, every one of these services, they don't pay for themselves. That's why this statement is set up this way, is to show that governmental services do not pay for themselves. Down here is your general revenue. So property taxes, sales taxes, any other kind of taxes that gets collected and assessed. If you're a municipality, you have a lot of Class C road money that offsets the highways and public improvements. That's all general money that has to be come from the general public to fund these services. So that's why the governmental income statement is really set up this way, because it shows that governmental services don't pay for themselves. You don't have to pay for, if you live in a city, you don't have to pay for a fee for the snow removal guy to come around and plow your driveway. That's just built into taxes that you pay. So one of the things that I talked to James about and Ingrid was this number right here is really the only thing that can change to help offset the property taxes is charging to use the facilities. Now, I understand that it's, really hard to charge somebody to come and use the lake because somebody can slip down there and get in the lake and be using the lake for free. And, somebody up here is paying $5 to use the lake. So it's probably a hard situation to figure out, but, there's other things that possibly could charge for that can help offset that property tax increment. That way, right now the property taxes, everybody pays it. Charges for services, people who want to use it are gonna have to pay to use it. So, and it helps if other people in other cities are coming to Stansbury to use your facilities, then that's one avenue that you have to look at.
So I'm looking at this particular category here, about the third or fourth one down. It says there that the pool, at least at this snapshot in time, the pool was costing me, or had cost me $3,500, yet, so we're charging for service, and we brought in 14,000. And so supposedly I'm gonna have 11,000, but I made a profit of 11,000, right? Somehow I don't believe that, but when you add everything up, you're still in the hole 2.2 million.
Yep.
Right?
Yeah, so, but if you look at like the pool, that's a perfect example of everybody who goes to the pool probably is paying money to get into the pool.
I would agree, yeah.
So it's making its own money, so it's able to pay for itself.
Yeah, but
Hopefully, what I'm saying is it's offsetting some part of what it is.
With the expenses that are shown on there,
That does not
my
include,
wages, I've got wages.
that does not include wages.
Well, and the other thing is don't get hung up on the groupings for this one, because the groupings were changed. This is like historical groupings.
Okay.
But also in these expenses, anything that was capital, so if there were any improvements or anything that was done that was capital in nature that we need to depreciate over time, that's gonna be pulled out of these expenses. So that expense line item, that 3.5, is not gonna match what's in the fund statements as far as expenses. And this statement right here is all of your impact fees, general fund, and capital projects all together. So this is the whole of Stansbury. And that's why I say I don't really like, the only reason that I like to show this statement is to show that the government services really don't pay for themselves. That's why we have taxes. Other than that, like, this really isn't a true picture of how the operations are actually happening, because it's a culmination of all of the funds, not just individual funds that you're looking at. So, and you can see down here, I mean, your ending net position, so that's the assets of the Stansbury minus any liabilities, according to your full accrual statements, are $30 million. Well, you don't got $30 million sitting around. So you can't think, oh, we got 30 million in net position and we can go do whatever we want. You really don't have that because that's a historical value of all of your assets that have been accumulated over the last 50 years that are depreciated. And a lot of that is built into, I mean, a significant portion of that is going to be assets that don't depreciate. So not being depreciated, that means it's either land, water rights, like intangible assets that don't depreciate in value over time. You don't depreciate those on the financial statements. It's based on historical value and it stays there unless the value goes up, then you can adjust that for fair value. But that's going to be like all of your land and everything that you've accumulated since you existed.
So how can we make that liquid?
I have assets, I want it.
That's why I say don't look at this statement because this shows all of your, I mean, it's like if you have your house, you know, individually, you might have a house that's worth $500,000. So your net value is at least $500,000 minus any mortgage that you have on that, but that's not a liquid asset. That's not something that you can turn into cash. Well, you probably could, pretty short in this market, but typically that's an asset that isn't highly liquid that you can utilize to buy things. So that's why this statement really isn't the statement you want to look at. You want to focus more on these fund statements that really is just your cash.
Any other questions from the board? This is something we do yearly. It's a yearly audit. We have a third party. That's what this is. Comes in and helps us and gives us insight. So, in the spirit of transparency, we opened it and recorded it here. So I will. Sorry.
So Hammond, at the end of 20. This is really in the election.
Yep.
So I assume that the agency received this balance sheet, and if I didn't go on, you want to look at it.
Drop off.
Yep. Yeah, and this is public record too. You can go to the state auditor's website and pull this down.
State website. On the,
It's called, it's auditor.utah.gov. And you could pull down any municipality, any public entity has their financial report.
auditor.utah.gov.
Well, I will turn the time back over to you.
Thank you, John, for
Yep.
coming. Thanks for financing the board. Thanks for all these interested citizens that came
Yes,
out.
thank
We want more and more people to know what's going on, be involved, give us input. Thank you. Thanks for participating.
Oh, do we need to do that?
No, because it's not really a. No, so when we do the audit for, like, I'd really like to do it earlier. So last year was kind of changed, like it was not.
When do you want to do it?
Yeah.
Well,
Maybe we're-
Sorry.
so you're really at a cycle issue. That should be.
I'll be in Samoa.
I'll be, we'll get the audit from last year, then you can look forward and see, have you done this in March?
Yeah.
You have to see that we were $1.5 million.
Wait, so then we can't correct until March 24. Five.
Well, you'll see it.
We'll get
So maybe we have these sidebars outside.
Yeah.
Okay.
If you would entertain a motion, Madam
Okay, I have a motion.
Second.
All in favor?
Aye.
Motion passes. We are adjourned. Thank you.
So you can't do the other in February.
That's close until we get all.
I'll reach out.
So we're getting
Okay, so I keep having that. Expense rate. So that's the money that is there. We have no
That's perhaps.
I'm on the golf course, going to do that way. If I stop
It doesn't mean this.
And I do it's not the information. It's such a that you said we should put aside our stuff. Yeah. Oh, no, I understand.
Like it's really big.
So, I understand that.
So that'll be. So what you need to do is in your budget. You need to budget to use that. I mean, you're gonna.
So this is what's
So you'll have the deficit, you'll have the deficit on trees. We only give a money because if you don't budget, the next year, so you'll already.
yeah, and then reducing it.
Yeah.
So we're going to live.
So you won't have a finding necessarily. We'll talk about it.
Oh, I know. Because this is what, so we're planning on getting this. Do you mind stopping the recording? Thank you.
Hey, quick question, I need to get to the Friday one, I know you sent out some stuff more, that's, let's just make sure we have our 5 cents. Does that make sense?
I asked them.
No, that's stuff I thought most of that was.
Everything
like,
is-
Information, yeah, and obviously it was already. But let's, I don't know. I do want to.
I like 20 minutes.
Just, that was how.
Okay.
When is the deal?
When's the what?
Yeah.
BLM, what's that one?
Or was it?
A DWO is next.
That's what I thought it was Tuesday. Is it Tuesday?
And they know that's one. Give me some. Let me check.
Okay, yeah. No.
So that's for the taxes.
They usually like it out.
So we're gonna. Use it.
We think just.
You don't have to agree. Property
So I balance everything at 0, 0. It has to be also the grants. We got a grant this year. But we didn't spend anything. We spent $15,000. That's part of our contributions for us. So how do I write it?
You'll just want to count it in revenue for it. Are you talking about your budget?
I can, in the budget, I can count it. We didn't get it.
Yeah, you don't have it. It's gonna be a deferred. Like that, you just like so when you anticipate spending it.
We spent
I'm sorry. I'm saying.
So you would just budget for spending. And then 100,000 is not a show.
which I put it in
Yeah, and when you do your, when you ask for support, you're gonna wanna have Laura help you count it as the per revenue.
Oh, hey, nice.
So next year's that, the revenue, my expense, next year. But I spent $16,000, which is off. Okay, I just wanted this year.
That's just your.
And it's in expense.
The money, when you get it, the $100,000, you're not gonna spend it. You're just gonna put it. Well, are you gonna get that 124?
That's what they're reimbursing us, so
Oh, so
funding
you're
us
all,
spending.
so you have to spend it. And then
Same with the sign, it's right up for $500,000. So we have to pay first. 5%.
yeah, that's typically how they're.
So the 17 for this in the 2024 budget and revenue, that's something that people are very.
Because you'll spend the money and you're just wanting to stay on top of it when you spend the money. Put it in. So you can turn around.
Well, that's what I'm thinking myself.
Well, as you spend the money, maybe you
Hopefully Wednesday.
You do another agenda.
Well, it's on me.
Ingrid, do you want us to put these chairs away, or do we, okay, no, that means not for the.
So.
I saw this movie, I said, it's on, you guys take it.
Hi, Scott. Hi. Yes. Hey.
I was interested if you were gonna be in the office tomorrow.
I am.
You're still in the government.
Scott was on the board for lots of years.
I will be in the office tomorrow, I'm running a little late, I've been helping with the election.
And it good for you.
So I was there this morning.
Well, you tell me what you want. My son-in-law.
After the election.
See, Sam.
Yeah.
I appreciate that.
Thanks for coming.
Yeah, I didn't hear from you. But I get distracted. So, yeah.
Thank you.
Thank you. 4 hours. You guys stay out of trouble?
That's right.
I grew up doing GSA budgets.
You grew up where?
Doing GSA budgets.
Oh, I'm sorry.
Yeah. So when you talk about it, I'm just like, sure, it's gotten easier. Right. It was fun. You know,
So is it better to do the reviews or do you want to do all the line items?
Well, they need to see it also, if they need.
We're busy.
Because ours is pretty good.
Yeah, I was gonna go early.
Yeah, they can be reviews and if they have questions, then you can. But they need to be informed because they're the ones making decisions.
I told.
So-
No, I sent the worksheet. For the 2023 and I did the 2024 that has, you know, all details, the other system.
Yeah, I mean, I would have Kyle, I know that there's a report over the aspect of the grass. So it's very easy.
Yeah. Well, that's what.
No, Veronica did. She liked to use her own Excel sheets.
Even though, and it's right,
Regular
it's right to her.
connection, Wi-Fi, it's like
He wanted
this.
to-
I'm marking, well, first thing they do, I'm not
Because
stopping.
then there's nothing I can modify,
Yeah.
there's nothing I can change.
And the problem with Excel sheets, and even Dave, like,
I'll start at first with their
Dave, he worked for a city. And
I've been
back
thinking
in the
that.
city.
I don't know, and it's too late to find out.
You tell your outside consultant that he has to put all of his capital assets to one something. Because he uses Excel.
Got my mind.
So he was like, I don't want to question it. He was like, hey, you got that. He was like, I've never questioned it. Nobody's ever questioned it. And I'm like, but Dave, what happened, Mark? That thing your number. And then you don't realize it for a couple of years. And then all of a sudden.
He's the one
everything
that
checks out.
to put the stuff
Yep.
into.
That's why. Because since then.
Could it transfer you ask about? He didn't transfer you.
I was out
Sorry, because he never looked out, so she didn't understand what he was doing.
And I think he was just balancing. the accounts.
Took a while
I
to.
mean, I should not have let him go. It's really hard for me to understand.
But yes.
Well, you ought to ask him, here's how much you charge just to help you guys get some more. But even a quarterly basis.
I'm not able to.
I mean,
Dave's really, he's got the person, I make fun of you, so, I'm like, you are the most, you're the biggest pest in the house, but he is very good at what he does.
I have
So
with
I
him.
think that's.
Yeah, yes. And I can see those two, but Dave's the kind of person that's like, so he actually works at Samoa. He was an off-island controller, and that's how I got to know him. And so, but there was a girl down there that was very controlled. She would throw him on the bus all the time. He was like, she threw him on the bus. And I knew better, because I knew his responsibility was. But he made it mad, he was just like, whatever, if you don't respect what I do, then like.
Why I had no idea she was.
Yeah,
That's something that I learned.
she did everything he did.
Yes.
So how sure am I that what I started with is fine? Because,
As far as your balances,
yeah,
I
for
mean,
2023, because did Flores, they put everything in?
yeah, I mean, everything was.
So everything.
Yeah. And you're having all that shit on
Yeah, we got you booked.
So that means that at least everything's rolling the right way. So they're good numbers for Joel. Whether
You with me on that,
it's the right way,
Yeah.
I don't know, because we don't have that level of detail. But I think that, in total, everything's good. Because the money trail like talks for itself. I mean, the money went out, so it's obviously the expenses were being done, so.
Yes, yeah. Did you bring your laptop that I can see what the issue is?
Tomorrow morning.
You can bring it tomorrow morning. Now that I've been told that I don't have to stress on getting Fund 95, but I'm okay.
So I'll bring it tomorrow and I'll try to come before the 9 o'clock meeting.
Do we have a meeting tomorrow night?
Oh, yeah.
Because it got changed so much that I'm not exactly
So
sure when the meeting
we're on
is.
at 9 o'clock, we're on at 11, we're on at 1.
Oh, I did not know there was one. Okay, so what time is the night? Which one is the
9
9
o'clock
o'clock?
is policy,
Okay,
11 o'clock is the county talking about the,
okay,
no, I think we're talking about so.
and 1 o'clock
And then
is,
at 1 o'clock, we're talking either Solomon Park or.
okay, I'm not involved in those, so,
I think that's right. So, anyway, if I come a little bit early, I'll show you what my problem is.
Okay.
It's probably an easy fix, but I try that.
okay, we'll look at it. Jim,
11 o'clock is the county.
Yes, okay, 9 o'clock is policy.
Now that
Okay,
I,
but when we talk about the county, we talk about Solomon Park, we talk about North Park.
No point. And then Solomon at the end.
Solomon is a what?
Yeah, it can be a pretty,
Okay, so our old GM used to do that, and everybody's eyes lights open.
yeah. Well, but that's their responsibility is to learn how to understand that stuff. I mean, they're the governing board, they're the ones that need to be making the decisions, but they're gonna be making the decisions. They damn well better know what the financial statements say. Like, the board needs to get themselves understanding, hey, this is what this information is giving. And it's a common problem throughout government everywhere, because you have elected officials that don't have a financial statement back.
Did you show him the summary that Hammond had to put together of the budget? Excel spreadsheet that Hammond had us put together for the 20. So our finance took that Florida state and had us put it in a spreadsheet so we can understand.
Okay.
So that's Pillar. What I gave you, that's from Pillars. I told you I'm trying to not to go for my numbers. So I didn't do anything that Veronica did
Right.
for the board meeting. I
Right,
just wanted to-
but what I'm saying is you took the numbers from Florida and put it in an Excel spreadsheet.
Yeah, you can dump it into it.
But that, I exported from Florida to an Excel sheet. I didn't modify.
Yeah, as long as
That seemed easier to understand.
Yeah, very much more, yeah, and that's totally fine, and that's one thing that I told Ingrid that I didn't like with Veronica was, Veronica wanted her own, and she wanted to populate her own spreadsheets, but it's too easy to manipulate, and it's too easy to make a mistake and not know you made a mistake. So that's what I was telling her, like Dave, when we first got working with Dave, it was, a really small city. And I actually gave the city a finding because he had all their capital assets in Excel. And he just tracked it year to year to year, and that's how he did all of his cities. And it was the first time we audited, and I gave the city a finding, I said, anything you have in Excel should be in your system. You should never use Excel sheets to track year to year to year to year. And Dave actually got mad at me, he's like, what do you like? And I'm like, Dave, what happens if you make a mistake? And then 5 years down the road, something's off and you can't find it out because you factored a number 5 years ago and you'll never be able to find it. Oh, I never thought about that. So he went out and bought us a software and he puts all of his clients now. He's like, dude, that was the best. Nobody's ever told me that. I'm like, I don't know how auditors ever told me that.
So which one would you have used? The annual, the 10th period, the standard financial
Current period.
report?
You can do
Which
like
one?
current year to date as you do it. And it should have your actual numbers to date plus your budget.
So that should show the percent.
That
Yeah,
should show.
we didn't do that the second
want
half of the year
every-
because it wouldn't
like-
make sense.
Current period, year to date
So this
balance,
is, yeah.
it does not,
So you'll have to ask Dolores
the standard gives,
which one shows the actual for the budget. And the standard, you could put it for any time period, so you could go from January 1 to, let's say it's November now, you can go to November 30th.
this one gives current year actual, current period, and prior year actual.
Yeah, But
That's
there
not-
are budget reports, so you'll have to ask, I don't know their system enough to
You know,
identify.
there's a budget report, so go budget report versus financial report.
Yeah, just ask it, because they have one that says, this is what
It's
your
the budget
actual is,
report.
this is what the budget is.
It's this one.
And that's really what the board needs to
This
know,
one
is
will
like,
not
okay,
show you.
are we close to budget?
It is 2023, but
But yeah, that was.
But that's the one. Okay.
Our budget,
to do this.
quite frankly, our budget's still no
Yeah,
semblance of reality for the last couple of years anyway, so.
yep. And everybody puts a big emphasis, I mean, let's say you can get an award by submitting your budget to the GFOA. And that's one thing, one big frustration that I have with the GFOA is Who freaking cares about your budget? Why are you giving an award for budget preparation? Nobody cares about your budget. It's
So
a
this
roadmap.
is the one you want.
Yep. So percent used in the budget, that's.
That's the one you want. Okay.
Yep.
So it'll be training.
Yeah, and then, he said that we do the fraud assessment this year.
You can do it whenever you want. It's not due until June, but I would just say have it done for us when we get here. And then you can just submit it right when we look at it, have the board review it. Whenever you guys want to, February.
That's
March.
February and March. We'll do it in May.
Yeah, do it in February.
The
Are you
earlier-
gone?
Or I'm gone.
The earlier you can do it, the more help you're gonna get from the boards.
Oh, really?
So I would just tell them, as soon as the year's end and you reconcile the bank accounts, just say, hey, will you help us close our books and put together the audit package for the auditors?
Question, we don't get from the county until April for the year before. And it's usually a settlement. And we don't get it from
The true
April.
up, like the true up.
So how do I?
Well, but do you guys,
record that?
do you record that? Do you pull it back into 2023?
We marked it in 2023, and I made a note that it was
Just
in
estimated.
2022. Oh, estimated? It's a negative. Okay.
Yeah, you can just estimate what the amount's gonna be.
Oh.
And then, as long as it's not material, well, we usually won't issue until April anyways, it'll take us a couple months to, I mean, sometimes we can come in, if everything's clean, we can come in, issue the reports and be done. But we can look at last year and say, okay, based on last year's, here was the true up number. Like, their estimate this year is gonna be, you know.
So I remove that amount from whatever taxes we get on the,
Just net up with your taxes.
an estimate. After you told me not to get too close.
Yeah, like, so that's why we just, like, in the management, I always say there's estimates in the financial statements. And we just look at what you estimate in the financial statements and make sure that they're. Because sometimes, like, a lot of municipalities, we might go in, like, so their year end is June 30th, and we might go in the end of August, and they still haven't got all of their Class C road payments. And we can't find them anywhere online, and they want to record them, and they want their audit done. So we just estimate them and then move on.
So I estimated to be in my budget.
Yeah, I mean, you could just have Polaris help you do a journal entry that just puts an estimate in there.
Do it as a journal entry. See, Veronica was against journal entries, and so I try to do as minimal journal entries as I can. And that was one of the
Journal
problems I
entries,
had
so-
because they don't need it from journal.
So journal entries are all of the majority of your financial statement system should be built on transactions. But when you close the books, there's not specific transactions that happen to do that kind of things. To record depreciation, to do this, like, you have to use it. Like, I would say, yes, I'm against using journal entries just to put in the normal everyday stuff. But journal entries have their place. So. Yeah, if you call Polaris and they say, hey, we're gonna need help this year, close our books. Then as soon as I get the reconciliation, you can just close our books and then send the audit file to.
But the scary part is Lucy told me I had to do the film one, and now you're telling me I don't have to.
You don't have to do that in your budget, because there's
But
nothing.
that's what she told me, I
Yeah.
thought it was done with my
I'll
budget.
tell Kyle, I'll call Kyle.
I thought I was completely, I mean, I still have to make sure my numbers are correct and.
Well, there's nothing in Fund 91 that affects anything that on your end. Because all that is track of what we're gonna capitalize on the government line and your depreciation. And none of that is, budget for any.
I'm doing the amended budget, I don't have to do it at all.
What do you submit to the state?
Perfect.
Only funds that are operating.
Thank you so much for coming, I
Okay.
appreciate it.
I'll call Kyle tomorrow and I'll have him give you a call.
Okay, I know they're busy,
I know, they're so busy.
but, they have grown so much, it's amazing.
They have, and I don't, like, we're in the same boat. I mean, we've grown so much that
like our risk right now is that we're not serving our clients as good as they should. We're so busy. But, like, I can't help it, like, I can't get enough people that want to work, and you just have clients that, like, a lot of y'all, just all